It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's the Real Estate Breakfast, back for the weekend, breaking down for you the Australian property market. Got a busy show coming up. Shortly, we are talking to Faisal Durrani from Knight Frank in London. He's going to talk about the Dubai UAE property market, where Aussies are continuing to migrate there. And then we're going to be catching up with Asti Mardiasmo, the head economist for PRD. It is a Saturday, February the 7th, a big day on this day back in 1964. The Beatles with the British invasion when they landed at JFK Airport in New York. If you are celebrating a birthday today, you're in good company. Chris Rock is turning 61. Garth Brooks, the country music icon, is turning 64. And you know you're getting a little older when Ashton Kutcher is nearly 50. He is turning 48. If you are in Sweden, Denmark and Switzerland, there has been an appreciably big spike in listeners in these countries. Why? Well, I think we know why, don't we? It's a crazy time with politics, and what is happening in the US is affecting Europe, especially Northern Europe's concerns about the world order. And I've heard people say to me, just count down the next 3 years, Craig. It will be over soon enough. Really? I don't think so, because 3 years away, that is a long way off in the distance. Let's take you right now. In fact, he's in London. Faisal Durrani for the first time in 2026 from Knight Frank. And a very good morning to you, Faisal. Good to have you on the property show. And you were just telling me off air that the Knight Frank buyers, you've got a comment to make because they are scattered far and wide.
Yes, that's right. Good morning, Craig. Great to be back on the show. One of the things that we do track as a business is where our buyers are coming from for residential real estate in Dubai. This data used to be available from the Dubai Land Department, where it was published across the entire city. However, we no longer have access to that. So all we can do is look at sales that we have done as a business. And last year, 55% of Knight Frank's residential real estate buyers in the UAE came from the UK and Europe. 21% of them from the EU, excluding Germany, and 10% from Germany itself. So what's quite interesting is, whilst we always expect to see countries like the UK, India, or Egypt, for instance, kind of jostling for pole position, we have started to see over the last year or two much higher levels of interest from buyers from the EU broadly and Germany specifically. So yes, that definitely is a trend of rising interest from that part of the world.
Yeah, exactly right. And you always sound extremely positive every time I talk to you, but there are some risks, aren't there, in amongst all of the positivity? The sentiment is right up there, but we can always forewarn people that, yes, there is always going to be a risk factor, and I think just given what I was saying about the politics, that is always in the back of everybody's mind as well.
Of course. I mean, look, the residential market in Dubai has enjoyed a price bull run for more than 5 years now. And at this late stage in any cycle is when you'd start to see a tapering off in that rate of growth. We're not suggesting that we're approaching any sort of cliff edge moment when it comes to price increases, notwithstanding any sort of global black swan event that we're not able to foresee. But this is the time when you would expect the rate of increase to slow. And look, domestically speaking, the UAE economy is in a very healthy position. We've just seen some new figures come out from the government of Dubai for economic growth in the 12 months to the end of September, and GDP rose by almost 5%, which is pretty strong. It's healthy. It tells us that jobs are being created. People need housing. Therefore, there is demand for housing. The population is rising. It grew by about 5.9% last year. So again, those people need homes to live in. But one of the things we are keeping a close eye on is the rising volume of residential supply. Now, for the next 5 years, we're tracking about 350,000 homes that could potentially be delivered by the end of the decade, which works out to about 70,000 homes a year. But whilst that is about double the level of housing completions the city has seen over the last 20 years, what we are noting is that developers aren't necessarily able to deliver everything they're promising on time. In fact, last year, the completion or materialization rate was about 46%, and the year before that, it was 50%. So we seem to have a contracting capacity issue in the market, which to an extent is perhaps shielding the market from the risk of an oversupply. But of course, if developers do manage to deliver 50, 60, 70, 80% of whatever they are promising on time, then we do need to be quite careful about that balance between demand and supply, because right now things do appear to be quite finely balanced.
You travel all over the place and you're constantly asked probably that question about oversupply. Off the back of that, is it a bubble? Is the Dubai property market going to burst? How many times you have been asked that? Probably many times. But how do you sort of square that when you might be in Saudi Arabia? I know that you're heading there very shortly, and somebody might say that, an investor. Do you think we're going to be hitting a bubble? How do you navigate through, it could be,
Yeah, look, very good question. And I think as cliche as it sounds, no two property cycles are ever the same. Dubai is a relatively young market by global standards. It only opened to international buyers back in 2002. And we've had two full property cycles. We're in our third freehold residential market cycle at the moment. There are several fundamental differences between this cycle and previous ones, but one of the most important ones relative to the question you just asked me is the nature of buyers on the market. Now, what we know is that the previous property market cycles were defined by what we call speculative investment activity. So people essentially buying to flip. And the way we know that is because we've done analysis on how much property was resold within 12 months of transacting. And that's how we define a speculative investor. So back in 2008, around 25% of the homes sold in Dubai were resold within 12 months of being first purchased. Today, that figure is down at about 4.5%, Craig, and it has sat at that level for the entirety of this cycle, which is telling us that people who are buying homes in Dubai today are buying them as what we would call a genuine end user. So be it for personal use or be it for investment reasons. And on top of that, the slightly more intangible and harder to quantify buyer group that we've seen is the rise in second home buyers or holiday home buyers, which is, of course, one of the key defining features of the market today, which is why we've seen such a surge in the luxury homes market in Dubai, which, as I mentioned to you before, is the busiest in the world and has been since 2022. So that is why I would say that we are not in a bubble situation, and the market is entirely different to where we've been previously.
I guess you've probably done some modelling around what you're just talking about, that flipping. If that reached a certain number, would the market get the wobbles as a result of that cohort alone?
The best example we've got, or the best time period we've got to look at, would be what happened before the global financial crisis, when the residential market in Dubai was brand new to the world, and we had that relatively high level of speculative flipping activity taking place, up at about 25%. Ever since then, between 2008 and 2025, it has been on a constant declining slope. We've never seen it go up to those sorts of levels again. I mean, even if we look back to the second market cycle in the city, we were up at about 15% of homes being resold within 12 months of transacting. So it's been on a constant downward slope. And I think if that starts to tick up, then that would give us an indication that we're seeing more of that sort of speculative investment activity, but we're not there yet.
It's not a bubble, but, who knows what may happen. You get a global thump and anything is possible when it comes to that. Hey, Faisal, great to catch up with you the first time this year.
Thanks, Craig. Always great to be on the show.
You're listening to the Saturday Property Market Update.
Let's go back into Brisbane and catch up with Asti Mardiasmo, the Chief Economist for PRD. And good morning to you, Asti. Welcome into the Real Estate Breakfast. We had these comments from Michelle Bullock.
Now, I know this is not the news that Australians with mortgages want to hear, but it is the right thing for the economy.
So a lot of people are hoping the Reserve Bank is one and done with the rate hikes. But should they be expecting the RBA to undo or reverse more of last year's rate cuts?
The board has taken a cautious approach. They've made one rate rise this time, and we'll observe now what happens to financial conditions. We're already observing some tightening in financial conditions, including through the exchange rate a bit, and we'll wait and see what the response of some of the credit, housing, those sorts of things. I'm not predicting there'll be more rate rises, but I'm also not saying that if inflation does remain too high, that there mightn't be.
But first, before we get to your comments, did you have a little bit of a break over the Christmas New Year period?
Hello. Yes, I did have a bit of a break over the Christmas period. Thank you so much for having me again. I went camping, actually. For the first time in my life, I actually did proper camping, which means that it's not glamping, but actually proper camping, sleeping on the ground in a tent kind of thing.
Yeah, no, count me out for that. Not unless there's a hotel close by.
Look, to be honest, it's probably not my first choice, but I was roped in. I was promised a good time, and let's just say that I won't be rushing back into that type of camping again, but it was definitely an experience.
Yeah, so what do you think is likely to happen from the RBA in the 2026 year?
So in terms of cash rates from the RBA, what Michelle Bullock is saying is very likely to hold and to be true. And the reason being is that we ended 2025 with an inflation rate that is definitely higher than the 2 to 3% healthy target range. So I think one of the main things that we have to remember is that there's two measures of inflation, one on a quarterly basis and one on a monthly basis. And what the RBA does is that they use the quarterly basis more so than the monthly because it gives them a much more richer over 3 months type of data.
We should just touch on the regionals from last year because the 2025 pricing, it didn't slow down. No surprise, we have seen the regional pricing over the last 5 years just go from slow, medium, and then it's to where it is now. 2026, I can't see how the regional areas are going to slow in any way, shape or form. How do you read that?
I would say that I completely agree with you. I mean, 2025, we ended in, double-digit percentage growth figures for most of regional areas. I mean, if we look at median house prices in regional Queensland, South Australia and Western Australia, they actually outpaced the median house price growth in Brisbane, Adelaide and Perth. And so definitely regional markets have accelerated so much in 2025. Even regional New South Wales and regional Victoria had the same growth rate comparison to Sydney and Melbourne when it comes to house prices. When it comes to stock in regional areas, most of the stock that has been planned are land lots, not established houses or units. And we all know that land lots take quite a while for it to be turned from, a block of land and dirt into an actual house or a unit. So definitely, I don't see it slowing down anytime soon.
When's your first report due out this year?
Well, strangely enough that you asked, because my first report that we're releasing in PRD will be in mid to late March. This is the one that is actually going to focus on regionals across Queensland, New South Wales, Victoria and Tasmania. And what we'll be doing there is basically identifying regional areas, so that's local government areas or local councils, that are still quite affordable but have had quite a lot of growth in the past 12 to 24 months.
Asti Mardiasmo, you're going to be as busy as ever there at PRD. Once again, thanks for coming back onto the Real Estate Breakfast.
Thank you so much for having me.
We connect you to the best real estate information across Australia. The Real Estate Podcast.